In this lesson, I'm going to answer some questions that have been asked many, many times in recent years about cryptocurrency and Bitcoin. And these questions continue to be asked to this day and probably will be continued to ask in the future. So whenever you're watching this lesson, this probably will still apply. And those questions are, is cryptocurrency a Ponzi scheme? Is it a scam? Or is it an economic bubble? And you could easily interchange Bitcoin with cryptocurrency. Of course, we know that Bitcoin is a specific cryptocurrency, but those same questions are often asked about Bitcoin. People wonder, is Bitcoin a Ponzi scheme? Is it a scam? Is Bitcoin in an economic bubble? So we're going to take a look at that in this lesson. So let's start with Ponzi scheme, because that is one of the most egregious potential allegations, right? Everyone knows that Ponzi schemes are horrible. These days, often when we think of Ponzi schemes, we think of the late Bernie Madoff, who perpetuated one of the largest known Ponzi schemes of recent history. And so we can see here the definition of a Ponzi scheme is it's a form of fraud that lures investors and pays profits to earlier investors with funds from more recent investors. The scheme leads victims to believe that profits are coming from legitimate business activity, but they remain unaware that other investors are the source of funds. So based on this definition right here, cryptocurrency is not a Ponzi scheme, and Bitcoin is not a Ponzi scheme. That having been said, there may be certain cryptocurrencies that are very similar to Ponzi schemes. Okay? So first of all, why do I say that cryptocurrency and Bitcoin themselves are not a Ponzi scheme? Well, because the way they work is they don't simply pay profits to early investors with funds from recent investors. Now, the argument could be made that the more recent investors are buying at a higher price, right? And therefore they are feeding profits to earlier investors who are selling at those prices. But that's not the definition of a Ponzi scheme. Additionally, it is not the way Bitcoin works is to lead victims to believe that the profits are coming from legitimate business activity. I mean, essentially, Bitcoin is what it is, right? And other cryptocurrencies, for the most part, have a certain purpose or technology that they're involved with. And so, generally speaking, most cryptocurrencies, again, would not fit the definition of a Ponzi scheme. Now, I say that some would be similar to a Ponzi scheme because there have been some fraudulent or very, what shall we say, unethical or sketchy cryptocurrencies that have come out, right? There are literally thousands of cryptocurrencies out there. I've heard some estimates of 10,000 various cryptocurrency tokens or coins, whatever you want to call them. Many of those, they have been offered through what they would call an ICO. That's an initial coin offering. And some of those have been essentially run as a scam, like a Ponzi scheme, as a matter of fact. In other words, the people who invent these particular cryptocurrencies and put on these ICOs try to make it seem like there is some sort of a legitimate technology or use for their particular cryptocurrency, when in fact there is nothing. There is nothing behind it. It's just like literally just code. Okay, that's sort of the allegation that some uninformed people say is the case with Bitcoin and other legitimate cryptocurrencies. They say, oh, well, it's really just nothing. It's just a bunch of zeros and ones. Well, I'm here to debunk that theory. But the fact is, there are actually hundreds, if not thousands, of cryptocurrencies out there that essentially have no use whatsoever other than to try to make money through sort of a scheme. So there are some out there. But in terms of the well-known cryptocurrencies, like Bitcoin and Ethereum, and for the most part, I would say most of the popular ones that you would find on Coinbase. You know, Coinbase currently has about 60 cryptocurrencies that you can trade on their platform. All of those have specific uses. Now, by the way, I'm recording this prior to Dogecoin coming to Coinbase. So up until this point, they have been pretty good about vetting the cryptos that are traded on Coinbase. But because of consumer demand, they are saying they're going to be soon bringing Dogecoin to Coinbase. So by the time that you're watching this, Dogecoin may be on Coinbase. And I will say that, again, as of this time, Dogecoin has absolutely no utility whatsoever. Now, it can be used, I guess you could say, as a currency. You could potentially use it to accept payments. So it could be like a store of value. Arguments can be made. Okay, arguments can be made that it would be similar to any other cryptocurrency like Bitcoin. Bitcoin's a store of value. People give it the value because that's what they believe holds the value. Some people say the same thing about Dogecoin, but I don't buy that. And so I think that Dogecoin in some respects would be similar to a Ponzi scheme. But it still wouldn't fit the definition of the Ponzi scheme because people who are buying Dogecoin are very much aware of what it is and aware of where those profits are going to come from. They know that in order for them to earn profits, others have to then buy Dogecoin for a higher price. So it's still not really a Ponzi scheme. I've heard some say that Bitcoin and cryptocurrency fits the description of the emperor's new clothes. Okay, some refer to this story as the emperor has no clothes. If you are not familiar with the story, by all means read it. It's an ancient, public domain fairy tale, essentially. Looks like it comes from 1837. It's a Hans Christian Andersen folktale. And essentially in this story, you've got a couple of scammers that come to town. Well, here it is right here. Here's the plot. Two swindlers come to town of the emperor, and they say, anybody who cannot see these magnificent clothes are stupid or incompetent. And so then the emperor hires them and yada, yada. You know the story. He wears these clothes, but really he's naked. Everyone, he's fooled. Everyone's been fooled. I think that there is, certainly a grain of wisdom in this old tale. Certainly some things that we can glean from it, some parallels that we can draw. But it doesn't fit the description of cryptocurrency or Bitcoin as a whole. Okay, again, there may be certain cryptos out there, okay? Those ICOs that are launched by scammers and sketchy people. Again, there's thousands of them, and anyone can launch a cryptocurrency these days. So yeah, I think some of those basically are like the emperor's got no clothes because there is literally nothing behind those ICOs. They're selling absolutely nothing. But in terms of Bitcoin and other popular cryptocurrencies, they absolutely are something, okay? In spite of what some people think, that it's just code, just ones and zeros, and it's really absolutely nothing. That's not the case. There is real technology behind it. There are real people behind it, real developers behind it. There is millions and millions and millions of dollars being invested into this technology. Okay, they're not just investing it into thin air, like the emperor's new clothes. Okay, we're not talking about an entire, culture and an entire industry that has been built around this cryptocurrency world. There's not an entire industry that has been built around nothing whatsoever. It's not been built around thin air. It's been built around real technology. Okay? And so Bitcoin certainly is not the emperor's new clothes because it is a real technology. It has real utility. And again, I would say, most of these major cryptocurrencies, you could not consider them to be the emperor's new clothes because, again, there are real people behind these, real technology, real transactions that are happening, real business that is taking place, real things that are being done. Okay, mathematical equations that are being solved, predictions that are being made, security that is being perpetuated. I mean, I could go through and tell you the story of it. There are real files that are being stored on real internet web servers. Each of these, so in some cases, so Decentraland, that's a game. Okay, there are real games that are behind some of these. I think that's the only one on Coinbase that's actually a game. The rest of these have other utilities. Some of these are real exchange platforms or swaps, like 1inch or Sushi Swap. Okay, I could go through and tell you the utility of all these. There's Engine, which is used for creating NFTs. Now, NFTs is one I'll expand on just a little in this lesson. There are real funds that are investing in various cryptos to earn profits, like YFI. So each of these have utility. They have usefulness. They are real technologies. So absolutely, they are not the emperor's new clothes. But again, if we were to look at all 10,000 of the cryptocurrencies that are currently out there, sure, I could see how many of those could be like the emperor's new clothes. But that does not apply to Bitcoin or the more popular ones. Maybe I shouldn't say popular, because some of those ones, some of them are very popular, but still have no utility, like Dogecoin. So not popular, that's maybe not what I mean. But what I mean are the ones that have true utility. If they have true utility, they have value. That means that they are not the emperor's new clothes. Now, how, besides just me saying it, scrolling through a list, how would we know that this is real? How do we know that there is actually an industry behind this? Here's one very simple way that I can prove it. There's an event going on right now called Consensus, being put on by CoinDesk. And here are some of the speakers and panelists. And if I scroll through this, you'll see that these speakers and panelists work for so many different companies within the crypto industry. Okay, many of these companies I haven't even heard of, but if I go and look them up and Google them, they are real. Okay, so these aren't just fake companies. I've looked several of them up. So many of them I have heard of. Many of these are also in either founders or CEOs of actual crypto technologies. So I could scroll through this list, and it's massive. Okay, ETHStaker, Trillium, BlockFi, Casa, Onyx, Volt Capital, Fairlead Strategies, Pixelcraft Studios, Dragonfly Capital, Ava Labs, Zaper, Bloom Solutions, Blockchange, JP Morgan, I'm sure you've heard of, Lolly, Presidency of Columbia, interesting, Scale Labs, that's a crypto, FTX, Zap Solutions, Polygon, that's a crypto, Immunify, Chain Analysis, Purpose Investments, Genesis Trading, ErisX, Chainlink, that's a crypto, Paxos, Roll, Avanti Bank, PwC, OnRamp, Bicameral Ventures, Accomplice, Starkware, The Defiant, Ethereum Foundation, IOV Labs, Crosstower, Ontology. Now, this would take me, half an hour to probably read through all of these, because I can keep scrolling and scrolling and scrolling and scrolling. And these are all different companies. These are just, and it's not like each of these people are, one person entrepreneurial companies. We're talking about many of these are companies that have hundreds of employees or representatives or virtual employees. I mean, I could scroll and scroll and scroll and scroll and scroll. This is a big industry. Now, just because it's a big industry, that doesn't necessarily mean it's a safe industry. That doesn't necessarily mean it's not an economic bubble. Okay, so we'll talk a little bit more about that next, because it absolutely can still be an economic bubble. In fact, the comparison that I'll mention in a few minutes is the dot-com bubble, right? If we were to look at the dot-com bubble, I'm sure they had conferences just like this, back around the year, late 90s, the year 2000. Conferences like this one and bigger, with all sorts of representatives and employees and CEOs of all sorts of dot-com companies, right? And then we know what happened. Most of those went belly up. So, the dot-com industry also wasn't inherently a scam. It wasn't a Ponzi scheme, but it certainly was an economic bubble. But I think this here proves that this is not the emperor's got no clothes. This is a real industry, real people, real technology behind it, real usefulness. Okay, we don't have all these companies and hundreds of people. These are hundreds of people that actually represent thousands of people that are all just working on nothing. Okay, they're not working on nothing. They're working on solving real problems, things that actually bring value to the world. Okay, so it's not a matter of the emperor's new clothes. So, essentially, it's not a Ponzi scheme. It's not a scam. But is it an economic bubble? And that's one that, oh boy, that one's gonna make us have to take a real honest look at this thing. Okay, there are certainly a lot of crypto evangelists that would not want to admit that crypto is in an economic bubble. But I think if we look at the history, we will see that it potentially is in an economic bubble. Okay, sometimes also known as a speculative bubble, a market bubble, price bubble, financial bubble, speculative mania, or a balloon. It's a situation in which an asset price appears to be based on implausible or inconsistent views about the future. Key word there. It could also be described as trade in an asset at a price or price range that strongly exceeds the asset's intrinsic value. Okay, and so is that happening right now? Maybe. Obviously, those who oppose crypto, those who do not believe in it, would say, absolutely yes. That's exactly what's happening. They would say, absolutely, Bitcoin is being, bought and sold for $40,000 or whatever. There's no way it's worth that much. It has no intrinsic value. That's what they're saying. It has no intrinsic value. It's just code. Well, you could say the same about just about any financial instrument, especially fiat currency. There's no intrinsic value in just one piece of paper. And so I think that those people are really overlooking the value. I think they do not understand the intrinsic value of Bitcoin and other useful cryptocurrencies. There is value there, but that doesn't mean that they're not being overvalued. Okay, it may very well be that some of those assets are trading at prices that strongly exceed the asset's intrinsic value. That we don't know yet. That's why it's a speculative bubble. You don't know it until the bubble pops, right? However, we have seen that crypto has already been in bubbles that have popped. And so that would also lead us to believe that it's probably happening again, right? So we can see here right on Wikipedia, there was a cryptocurrency bubble from 2016 to 2018, which is documented. And so the likelihood of it being in another bubble is pretty high. But that doesn't mean it's a scam or a Ponzi scheme. So let's look at some of these bubbles and see what history has to teach us about what this might mean. I've heard it said that Bitcoin or crypto is like tulip mania. Okay, there was a well-known article written about it. I think it was the New York Times. There's been others. Tulip mania, if you're not familiar with it, happened back around, when was it? The 1600s, 1637, hundreds of years ago. People went crazy over tulip bulbs. All of a sudden, tulip bulbs were worth more than real estate and all kinds of stuff. It was a mania. It was a hype. They became a store of value. It is what wealthy people spent their money on. Tulip bulbs. The prices of tulip bulbs went crazy. They would exchange 12 fat sheep for one tulip bulb. 2 tons of butter for one tulip bulb. 1,000 pounds of cheese for one tulip bulb. It's amazing. And then that bubble popped. Okay, the rest is history. But for a short period of time, there was a mania that people got caught up in, and they thought that tulip bulbs were the future of the world, apparently. The most scarce resource. So, is crypto like tulip mania? Well, similar to the emperor's got no clothes or the emperor's new clothes, I would say that there is certainly wisdom that we can glean from this piece of real history. I mean, after all, this actually happened. This is human nature, and human nature doesn't really change. Okay, that's why we repeat history and over again. So to ignore it would be ignorant. So I don't think we should ignore it. I think it's wise to take a look at this and say, is this tulip mania? And I think that there are probably certain psychological elements that are very similar to tulip mania. However, as a whole, I think if we look at the facts, again, if we look at this, the fact that we're dealing with a real industry, okay, this is not tulips. This is not tulip bulbs. Okay, tulip bulbs, obviously, that's a pretty narrow product spectrum. It's just tulip bulbs. It's used to grow tulips. It's beautiful. Beauty has value. So there was some value there. That wasn't even the tulip mania wasn't quite a case of the emperor's new clothes, because there were in fact tulips and people love tulips. But tulips are a very narrow product genre. Cryptocurrency is massive, you guys. It's a huge industry. And so that's why I would compare cryptocurrency more to something like the dot-com bubble, because it's really more like the internet itself, okay? The blockchain and the technology of crypto, this whole evolution of technology that we're seeing right now with the blockchain, I would compare that something more to the invention of the internet. So there's real technology here. This is not something like tulips. What I would say is that tulip mania could be similar to what we've seen in the mania of NFTs recently. Okay, so those are non-fungible tokens. And non-fungible tokens are very similar to a cryptocurrency token, except that they are unique. Whereas a Bitcoin, you can have up to 21 million Bitcoins. Some cryptocurrencies, you can have an unlimited number of them, like Dogecoin. There's no limit on that. An NFT generally is limited, often to just one unique unit. And therefore, it's viewed as being scarce. And people have used NFTs to attach value to pieces of art, usually digital art, and sold them for massive amounts of money. So earlier this year, we went through a time of a couple of months of NFT mania. Now, I do think that NFTs have value. They also have much more utility, I would say, than a tulip bulb. A tulip bulb really can only be used for one thing, as growing tulips. NFTs are a technology similar to cryptocurrency that can be used to attach value to all sorts of things, ranging from digital art to actually offline, real-life products and materials. But in terms of what it is, I think that people have gotten caught up in the hype similar to a tulip mania. Okay, they think that they're getting something truly unique and life-changing. But in a sense, I would say even more so than cryptocurrency, these NFTs are just pieces of code. People see them as, they're owning a piece of art. But really, all of us can have this piece. We can all have this art if we download it, right? We can all download this same JPEG, but only one person owns it. And so I'm not saying there's no value in it, but it's not. I would also say it's not as novel as some people think that it is. In other words, we've always had the right to sell intellectual property and pieces of art and even digital art. People have been doing that for years. The only difference now is that there's this proof, right, called a non-fungible token, an NFT. It's like this special proof of ownership. So it's not as novel as I think a lot of people think it is. There's some value there, to be sure, and I don't think NFTs are dead. I think there's still going to be usefulness to it. I think there are areas that NFTs have not even gotten into yet, so I think there's also potential for future growth. But I would say that's a little more like tulip mania. That's a lot different than if we were to look at, say, Bitcoin or cryptocurrency as a whole. Bitcoin and cryptocurrency as a whole, I think, do not equate to tulip mania, again, because we're not talking about tulips. We're talking about an entire industry. We're talking about something that's more similar to the invention of the internet. So if we go back and we look at some of the other examples of economic bubbles, the ones that I think are most applicable to crypto would be the ones that really involve new technologies that have the potential to make life easier and make money for people. So I noticed this one, the canal mania in the UK, starting in the 1790s. All right, this was the period of intense canal building and the speculative frenzy that accompanied it in the early 1790s. And so this was a technological advance. The price of coal in Manchester fell by 50% shortly after it opened, and the financial success was attractive to investors. Okay, so this is like, think about the internet. It's like the internet allows us to send data instantaneously from one place to another. This was hundreds of years before the internet, but it allowed them to move real goods from one place to another, and that was important. It allowed commerce to flow more freely, and it was a very profitable opportunity, so people got caught up in the frenzy of it and ultimately overvalued it, created a bubble that eventually popped. Okay, another one was the railway mania in the UK in the 1840s. Very similar pattern. In fact, it says it followed a common pattern. As the price of railway shares increased, speculators invested more money, which further increased the price of railway shares until the share price collapsed. Again, this was a new technology. They were creating railways that could move people and goods more easily. It was a very potentially profitable endeavor. It made commerce more widely available. And so people believed in it. They invested in it like crazy. The problem is it got overhyped, it got overinvested in, and the bubble popped. Similarly, the Panic of 1857, this was in the US, this also involved railways. Again, people went crazy for these railways because they allowed movement of people and goods across the country. It was hugely valuable. And, I think if I lived back then and I was an investor, I would have been investing too. I mean, of course, it was the most exciting thing to happen. The most exciting thing to happen to the economy in their lifetime. So of course they're going to be investing in it. It was truly a world changer. It was a life-changing thing. And so people invested in it like crazy. And again, that bubble popped. And so, we see these things they weren't necessarily scams, right? Because there were real technologies behind them. The canals, those were real. The railways, those were real. But they became an economic bubble because they were overhyped and people got caught up in the investing. And so the example that most of us remember from our lifetime is the dot-com bubble. This was a stock market bubble in the late 1990s because this was really the growth of the internet. And I think most of us that were alive and old enough to understand it at that time could see that this was like the future of business. Business was going this direction. And so it made sense to invest in these internet companies because business was basically transferring from offline to online. Was it a scam? No, not necessarily. I mean, it wasn't a scam as a whole. Now, some of those websites may have run in a bit of a scammy way. Some of them may have defrauded investors, but as a whole, the dot-com world, Silicon Valley at the time, it wasn't a scam. It wasn't a Ponzi scheme. They were creating real technology. They had real business plans. They had the world's brightest minds in many cases behind them. But they became overhyped, and In addition to that overhypeness, the companies themselves often were not run well. You can see here this part of the Wikipedia article talks about the spending tendencies of .com companies. They spent like crazy. They were not fiscally responsible. Their philosophy was to get big as fast as possible because that's how they would compete. They needed to, grow those users and all that kind of stuff. And so the bubble burst. But here's the thing I want to point out about this. Okay, even though the bubble burst, some of the companies that survived the .com bubble are Amazon, Google, and eBay. Okay, think about Amazon and Google. If you could go back to the 1990s and buy Amazon and buy Google, would you? Absolutely. And so I think that this one probably is the closest parallel to what we're seeing in crypto right now, because it is a modern technology. It is something that does have true utility. These folks, these hundreds of folks that represent thousands of folks who are behind the development of this industry, all the cryptocurrencies, they're, I'm not going to vouch for any of them their character, but they're doing real work. They're doing stuff. They're actually building real things. They're trying to help people. Yeah, they're trying to make money, obviously, but they're building real things that do real things that are made to either make life easier or somehow better for people. All of these companies are doing that. To some extent, all of these companies were too. In the .com bubble, these ones that crashed. Although, if you look at what these technologies were, I could go through and click on a lot of these. I think that that technology paled in comparison to the technology that we're dealing with right now in the blockchain and in the crypto world. All right, the vast majority of these .com companies were basically just selling stuff. They were basically just trying to sell stuff on the internet. Like that was their business model. We're going to sell something on the internet. E-toys, that's our thing. We're going to sell toys. This is interesting. Actually, I hadn't noticed this till now. Flues.com was a digital currency, folded in 2001 due to the lack of consumer acceptance. So, talk about a precursor. It was ahead of its time. And so, just like that one, flopped. We're seeing, and we're going to continue to see many cryptocurrencies flop. Right? It depends on what do they bring to the table. Are they truly improving people's lives? And the ones that don't, ultimately are going to eventually fall by the wayside. And so, yes, I believe that we are in a type of an economic bubble with crypto. So, which ones should we look at? I think that we should look at the ones that are, this is one reason why I like Coinbase, okay? Because Coinbase has a relatively small number of cryptocurrencies. They've got about 60 right now. I'm not thrilled with the fact that they're adding Dogecoin, because Dogecoin doesn't really have utility at this point. But compared to, say, Binance has over 500 cryptos available for you to trade. And a lot of those cryptos are pretty sketchy, in my opinion. That doesn't mean you can't make a lot of money on them. Just like I said, some of those have run kind of like Ponzi schemes. And obviously, if you get in early in a Ponzi scheme, you can make a lot of money too. But you really have to do your research with these. Are they really providing value? Is it being run, by a group that you can trust? Is it truly decentralized? A lot of questions you need to ask yourself about some of these cryptos. Whereas Coinbase, and again, this might change as Coinbase grows. Coinbase may have to become more like Binance in order to compete as a exchange marketplace. I don't know. They may realize they're missing out on a lot of potential profits by not, earning commissions on those other 500 cryptos. So I can't, I'm not going to vouch for Coinbase's future either. But these ones that are more commonly accepted, these ones that are the 60 on Coinbase right now, are the ones that I would look more strongly at. Now, even these, I don't expect all 60 of these to survive the next 10 years. Absolutely not. How many, I have no idea. Maybe 10 out of the 60 are going to survive 10 years. I don't know. Probably Bitcoin, probably Ethereum, probably Cardano. We don't know. We don't know which ones are going to really survive. Right now there are some that have been growing that are showing a lot of promising signs, like Uniswap. Uniswap is a swap exchange platform that has shown tremendous usefulness and growth over the last year. But we don't know if people are going to keep using that for the next 10 years, or if something bigger and better is going to come along that does it better than Uniswap, or does it better than SushiSwap or 1inch. We just don't know. So, there's definitely some risk in all of these. I think that the bigger and more well-known they are, in some ways there's some safety in that. If we were to sort by market cap, we can see that the biggest market cap right now is Bitcoin, then Ethereum. Tether is basically, that's not one that you really trade because it's just dollar for dollar. Cardano has a huge market cap. Again, US dollar coin, that's also just pegged to the dollar. ICP is a relatively new one to Coinbase that's got actually a big market cap. Uniswap. Bitcoin Cash is interesting because it's a fork of Bitcoin. Is there a future for it? I don't know. I think really it's riding on the coattails of Bitcoin. So even though it's got a big market cap, we could see it pretty much die. Same thing with Ethereum Classic. These days I'm doing some trades on Ethereum Classic. I think it's great for some short-term trades at this very moment in history because there's a lot of hype and a lot of retail investors behind it. But it's a hard fork of Ethereum, and Ethereum has so much market dominance that I don't really think a lot of developers are going to be using Ethereum Classic going forward. So I could definitely foresee it completely dying. So, like I said, I think a lot of these are going to die. That doesn't mean that you can't be trading them in the short term. But do your research. I mentioned the NFTs, right? Some of these are more geared towards NFTs, like Engine. Engine coin was basically developed specifically for NFTs. And so I don't think that we've seen, as of the time I'm making this lesson, I don't think we've seen the end of Engine yet. I think it's going to maybe hit some new highs. But at the same time, if you don't believe in the future of NFTs, or if you think that kind of the, tulip mania has taken place and NFTs are kind of on their way out, then Engine would not be one you'd want to invest in, right? That's what you have to look at. What do these tokens actually do? Is it something that is improving people's lives? And is it something that you can get behind? Is it something that you believe in? Okay? Obviously, a lot of traders don't go by that philosophy at all, right? Anybody who buys Dogecoin, they're not thinking about any of the things that I just mentioned. All they're thinking about is, I want to get rich quick. That's what they're thinking. They're thinking, I want to get in on this hype, buy at a certain price, and I'm going to sell it at a higher price, and I'm going to make money off it. And they don't care what that Dogecoin does. They don't care who buys it from them. They just want to buy and sell. And frankly, that's what, anyone that's a day trader, for the most part, that's what they're doing with all of these. There's day trading going on with all these, and people don't really think much about what they do. But if you're going to buy and hold anything, by all means, take a look at what it does and see if it's something that makes sense and if you believe in it. All right. Well, that is pretty much my explanation of whether cryptocurrency and Bitcoin is a Ponzi scheme, scam, or economic bubble. So my conclusions are that crypto, as well as Bitcoin, is not a Ponzi scheme. As I mentioned, certain non-useful cryptos might qualify. There are those that create cryptos, they do an initial coin offering, they're trying to sell something that has literally no value behind it. They're selling a crypto that has no utility. If it has utility, it's definitely not a Ponzi scheme. If it has no utility whatsoever, it's kind of like a Ponzi scheme. In spite of them not being a Ponzi scheme, virtually any cryptocurrency can be used by scammers. Okay, that includes Bitcoin and Ethereum. Any of them, they can use those technologies to create and perpetuate scams, and as well as creating Ponzi schemes. So you have to watch out. You got to be careful. That's why you would want to use a reputable platform for trading. That's why I use Coinbase. This is not the tulip mania. Okay, Bitcoin's not tulip mania. Crypto in general is not tulip mania because we're not dealing with tulips. We're dealing with real technology, real people, a real industry. Although, like I mentioned, certain fads, such as NFTs, may be similar to Tulip Mania because people are buying them based on hype. I think crypto probably is in an economic bubble again, okay, and probably will be again and again, until it becomes a mature enough technology that things kind of smooth out, years and years into the future. Kind of like what happened with the dot-com bubble, right? Eventually, things kind of smoothed out. Today, obviously, any of us would gladly accept stock from Google or Amazon. That might be like Bitcoin and Ethereum in the future. Buying Bitcoin and Ethereum right now might be like going back to the 90s to buy Amazon and Google. We don't know. We don't know that for sure, but that is the thought. For those that are buying and holding right now and plan to hold for, the next 10 years, that is a possibility. And so I think that the technology probably will continue after the bubble pops. Again, like Amazon and Google continued after the dot-com bubble crashed. We're going to see the blockchain technology continue, and we're going to see probably certain cryptocurrencies continue. Which ones those will be, we don't know yet. All right. Most experts would probably say the most likely ones to continue will be the ones that are currently the most famous, the most popular, and biggest with the biggest market caps, like Bitcoin and Ethereum. But really, we don't know. We don't know which ones those will be. But certainly, this technology is around for the long term. It's here to stay, and it's going to continue to evolve. Just like we've got all these, again, hundreds of people here representing thousands that are working on this technology day and night. All right, so those are some thoughts about crypto for you and what history has shown us. Hope you found that helpful, and take care.